about to drop the hammer and dispense some indiscriminate justice.
Welcome back, Strongman Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3. And sexy man who has the best style of any human being to have ever existed. I mean, come on. Isn't this shirt awesome? This is an outward symbol of my investing success because I buy index funds and I max my tax advantage accounts. Now today, I'm going to have basically a bash session of Sven Carlin. Because even though he is a smart guy, he's a PhD in finance, and he supposedly beats the market, I don't believe him. I think he's kind of running a semi-grift that is going to hurt a lot of people long run. Now, he recently came out with a video called Index Funds versus Stocks in 2021. The Facts Driving Future Returns, Passive First Dividend. He wasn't too brutal about index funds because he's an individual stock picker, but he subtly dissed them and basically said that if you just want to be average, you just want to be an average investor, then yeah, just go buy index funds. But if you want to be a superior investor, then you want to basically buy his course and listen to what he says and pay $450 a year, and probably goes up every year. In my humble opinion, I think he's full of crap. And here's why. No matter what these people say on YouTube, no matter what they claim, no matter what they show you in your portfolio, in the long run, the average investor sucks and never beats the market. Okay, sometimes they do. Very, very, very rarely. The average investor, you and me, who trades individual stocks, sucks. Look at this analysis by JP Morgan. This is 20-year annualized returns by asset class from 1999 to 2018. The average investor had a 1.9% annual return, which is the lowest freaking return out of anything else compared to it. Look at this, 1.9%. Inflation was 2.2% over that period. Homes went up by 3.4%. East Asia, and the Far East, or Europe, Asia, and the Far East, 4%. Bonds, 4.5%. The average investor underperformed everything. Literally everything. And yet this guy right here supposedly is going to teach you how to just crush the market. Don't listen to what these people are telling you. Because in my humble opinion, if you don't have a PhD in finance and you don't do this full time, you're probably not going to beat the market. And on top of that, even if you do have a PhD in finance, you're probably still not going to beat the market. Here's why I think that. Now, everybody says that, the experts are so amazing and they're so good. Well, here's the reality. Even the professionals that do this full time, that run actively managed funds, they underperform the index in the long run. Now, here I have a bunch of pie charts showing how active funds versus their benchmarks have performed, okay? The red, so for every one of these circles, if you see red, that is a percentage that underperformed the index for whatever it is, whatever the category is, over a 20-year period. And these are the pros. These are the guys that you're paying lots of money to hire analysts to do the things that Sven is saying you should do on your own. Now, look at this. All domestic funds, 86% of fund managers underperformed a freaking index. Real estate, 87%. All multi-cap funds, 90% underperformed their index. Small cap growth, 93% underperformed. It's a freaking disaster how bad these active managers are. Now, if the active managers, the full-time guys, the full-time traders, investors, PhDs in finance, CFAs, whatever, working full-time, they can't beat the market. And yet, where is he at? And yet this guy says that all you got to do is buy his course which is like $450 a year, and it's going to go up. And you're going to beat not only the market, not only the returns of the individual investor, 1.9%, you're going to beat the pros. Now, let's watch a little bit of what he has to say. And in part of this video, he claims that he has 20 or 30x'd, while the S&P 500 has 4x'd. Now, here's one thing that it just made me laugh. So he said he started investing when the S&P was 1,000. So you could look October 3rd, 2003, roughly is probably maybe when he started investing. That's when the S&P 500 was 1,000. Now, since then, it's gone from 1,000 to 4,441. So if we calculate the average compounded return since that date, since 2003, it's been 8.64%. Now, Sven claims that he's either 20 or 30x. So he's claiming that he has got a 20% compounded return over the last 18 years, okay? Now, you may say, oh, that's entirely possible, strong man. Well, here's what really kind of throws a loop into that. Now, we all know who Warren Buffett is. He runs Berkshire Hathaway. He's the big boss. He's one of the most famous investors of all time. He has underperformed the S&P 500 over that time period. So apparently, Sven Carlin is way better, is crushing Warren Buffett, one of the greatest value investors alive. I think he's full of crap, ladies and gentlemen. This is my humble opinion. Look at the returns of Berkshire Hathaway versus the Vanguard S&P 500 ETF. So if we start in 2013, you see they basically matched each other, and then recently the S&P 500 has even beat Berkshire Hathaway. But somehow Sven Carlin has crushed the market, and his investing chart would be like up here somewhere. That's where Sven would be, supposedly. I kind of think he's full of crap, okay? Now, what's the whole point of this video? Why am I making this video? Financial YouTubers, their whole point and purpose is to convince you that index funds are trash. When I clearly showed you that if you just consistently dollar cost average into index funds, you're going to beat all these clowns. You're going to beat individual stock investors. You would have even beat Warren Buffett over the last 17, 18 years. And on top of that, you're going to save yourself hundreds of dollars a year, or in Jeremy Lefebvre's case, $20,000 a year. But for Sven, $450 a year to basically research stocks, to gamble on them, and probably underperform the market in the long run, okay? That's what these YouTubers do. They try to convince you that, oh, if you want to be a sophisticated investor like active fund managers that underperform the market, well, you need to buy my course and pay me, and I'll teach you how to, 10x and, go to the moon. Now, Sven doesn't promise like 10x returns, but he did imply that he got 20% compounded over the last 18 years, which is hilarious because even Warren Buffett wasn't even close to that. Warren Buffett did worse than the S&P 500. So I guess Sven is just, infinitely better than Warren Buffett too. He's just a freaking hero, okay? Pay him $450. Now, let's see. He talks a little bit of trash about index funds. Let's listen to what he has to say.
Index. But let's look a little bit at the risks. I have this intrinsic value.
Let's talk about risk of index funds after this ad.
Do you want to grow your YouTube channel? Do you want to earn more views?
No.
More subscribers?
I want less views.
Directly in the link in the description below of this video, and I have put the dividend of the S&P 500, and I have put that it's the first double in 2030. But the question for your long-term returns and the key thinking when it comes to index funds, are you basing your whole retirement strategies on the premise that stocks will go up? That's the key question to see whether you're okay with that or not. Because if...
yeah, everybody does that. Now listen, when you buy index funds, even if the index is the same level, 20 years from now, if the market crashes, you're going to be buying all along during that crash. And then when the market recovers, even if it finally gets back to its original level after 20 years, if you bought all the way down and then the market goes up, you're going to be doing A-okay, okay? And on top of that, he's saying, oh, maybe the market's going to, be flat or go down over the next 10 years. Well, Active managers are going to do just as bad and probably worse because they're going to be charging fees and they're going to be underperforming the market like they normally do. And you think you can beat index funds, which have historically crushed active managers, they're professionals. You really think you can do that? Stop, okay? Stop. And on top of that, even another thing, he only focuses on the S&P 500. I tell you to buy VT, the Total World Stock Market Index Fund. If you want, okay, you can just buy the S&P 500. I tell you to buy VT because you're not freaking concentrated in one country. And even if the S&P 500's expected returns are going to be negative over the next 10 years, you're buying the world. You're buying everything. So you're not worried about just the United States, okay? This whole video, he has to attack index funds. He cannot admit that index funds are actually superior to active management, and they're superior to the individual investor. I mean, come on. Look at this. How can you deny this? 1.9% over 20 years. That is freaking garbage. Compared to an index fund, if you'd had the S&P 500, you would have got 5.6% from 1990 to 2018. Holy crap, okay? I don't hate him. I think he is intelligent. He knows more about finance than I do, at least analyzing stocks. But here's the thing. I know the facts. I know that index funds always win in the long run, okay? You have to be patient. And just to top it off, I mean, come on, 20% every year, and then Warren Buffett, does worse than the S&P 500? Get out of here. I don't believe it. Anyway, that's it. Don't let the index fund FUD scare you away. Max your tax advantage accounts. Invest consistently. If there's a market crash, don't change your strategy. Just max your tax advantage accounts every paycheck. Contribute to your 401k. Contribute to your IRA. And if the world is more prosperous and we have better technology and we're more productive, in the next 20 or 30 or 40 or 50 years, when you sell those stocks, the stocks probably will be higher, okay? Maybe. I can't guarantee that. Anyway, like the video, subscribe to my channel, tell your friends about me, and y'all have a wonderful, delicious weekend. Chew!